So how did I make $168 trading Google put options? So looking at Google at 9:32, Google at 9:32 on the 30-minute time chart, which is today 9:32. Right? Did I say 9:32? Yeah, 9:32. So basically the opening candle, basically what I did was I played some put options on Google once it approached the the 50-day moving average. Once that occurred, basically at 9:36 I sold out the position after waiting for a rejection of the 50-day moving average. 9:36 I sold out the position, making a gain of 168, just trading Google put options. So basically the game plan was, okay, let's try to see and wait if Google can approach the 50-day moving average and see a rejection by it. That happened within like, what is it, 4 minutes. So within 4 minutes, Google got rejected by the 50-day moving average. My position was going up, and once it reached my threshold of, anywhere near 5 or 10%, I'm just going to sell out the position and just move on to the next trade. So basically, what's the strategy? So basically the strategy is step one, you want to find an oversold stock to trade. You want to find oversold stocks to trade for the day. So what you do is you go to this free website called finviz.com. You go here, where it says screener. Click on where it says market cap. I typically trade mega all the time. Not all the time, but sometimes. But mostly, if you're a beginner, I would suggest sticking to mega cap stocks. Click on where it says perf YTD. And basically, it's just going to show a list of stocks from worst to best right now. And you can just use that list from 1 through 20 and basically create a watch list. Try to observe the support resistance levels of those stocks and try to see if you can play calls or puts. And basically, if you're playing, leap options, then you can decide whether go long on calls or go long on puts. Or if you're a typical day trader, basically you would kind of want to analyze these 20 stocks on the 30-minute time chart. Try to see if any of these particular stocks are on the, are they approaching the moving averages in a certain way? Is it time to play calls or puts, depending on how those moving averages are looking on that chart? So let's look at an example, right? So let's look at UNH. So, let's see if I can make an example out of UNH. So, let's see. On the 30-minute time chart, like always. Okay, so here, so if I were to start to look at UNH right now, basically, I would probably implicate that UNH is in an uptrend. The reason I say that is because the 9-day moving average is basically over the 50 and 20-day moving average. And basically until like 12:30, that's when the 9-day moving average crossed below the 50-day moving average. And then all of a sudden it just went down below the 20-day moving average. But here's how you could have played it. You could have waited for the moving averages to settle in a way, be a little bit more clear so you could get the clear picture, right? So what you could have done is basically, okay, hold on, wait a minute. The 9 and 20-day moving average aren't above the 50-day moving average. The 20-day moving average is currently below the 50-day moving average. Meanwhile, the 9-day moving average is above both moving averages. So what you could have done is you could have waited, try to see if there could have been a downwards trend, a change in trend being bearish, and look at it. So you can see, I think that's as close as I can get, but you can see that this 13 candle, that's when the 9-day moving average crossed below the 50-day moving average. And typically when that happens, that usually indicates that the trend changes from bullish to bearish. And so what you could have done is basically, okay, well, now that the 9-day moving average is below the 50-day moving average, I'll basically buy some put options on UNH once it approaches the 9-day moving average again, or approaches the 50-day moving average, and I'll basically wait for UNH to get rejected by either the 9 or 50-day moving average. So you could have bought one put option here when it approached the 9-day moving average, and your second buy could have been when you bought another UNH put option when it approached the 50-day moving average. That way you can dollar cost average. That way you won't be in a bad spot. And let's say that particular stock decides to reverse and go down even more, your position will be in the green a lot more faster. So basically, you waited for your second time you bought. Once UNH approached the 50-day moving average, you waited for the rejection. The rejection happened, and what's next, right? So what the next thing you could have done is basically try to analyze back the previous support levels throughout the day. So I guess you could say the support levels for the day was 314.45. So after you waited for the rejection of the 50-day moving average, you could have aimed for that previous support level of 314.45. So anywhere in the 314 range is a good spot to get out to position. That way that's your exit point. You know where to sell. So basically you're not stuck struggling to know okay, now I'm in a position, my position is now up 5 or 8%. How do I know when to sell? Try to analyze the chart. Try to analyze the chart's previous support or resistance levels. In this case, you can see that the previous support level was anywhere in the 314 range. So once you see that UNH got rejected by the 50-day moving average, try to aim for the 314 range. And basically that's how you can know when to sell out your position. But that's how you could use finviz.com to basically try to analyze how to to find opportunities to play in the market, whether it's playing calls or puts. So this is not financial advice. As always, take care. If you guys want to sign up with Webull, feel free. Link will be in the description below, and you could have a chance of getting a cash bonus if you sign up with my Webull link located in the description below. As always, this is not financial advice. As always, take care. Bye.